The impact of Donald Trump's tax cuts. A comprehensive analysis. Welcome to an in-depth analysis of the tax cuts implemented during Donald Trump's presidency. In this video, I'll explore the key components of these tax reforms, their immediate effects, and their long-term implications for the United States economy and society. Part 1. Overview of the tax cuts. In December 2017, President Trump signed into law the Tax Cuts and Jobs Act, TCJA, marking one of the most significant overhauls of the U.S. tax code in decades. The TCJA reduced the corporate tax rate from 35% to 21%, aiming to stimulate business investment and economic growth. For individuals, the act lowered the top income tax rate from 39.6% to 37% and adjusted tax brackets, with individual tax cuts set to expire after 2025. The standard deduction was nearly doubled, while many itemized deductions, such as those for state and local taxes, were limited. 2. Immediate economic effects. Proponents argued that the tax cuts would spur economic growth by increasing business investments and job creation. Initially, there was a surge in stock buybacks and dividends, with companies like Apple and Cisco announcing significant buyback programs. However, data indicates that while there was a short-term boost, the long-term impact on business investment was modest. The nonpartisan Congressional Research Service found that the tax cuts had a relatively small, if any, first-year effect on the economy. 3. Impact on federal deficit and debt. The TCJA was projected to add approximately $1.5 trillion to the national debt over 10 years. The Congressional Budget Office estimated that the act would add an estimated $2,000 to $289 trillion to the national debt over 10 years, or about $891 trillion after accounting for macroeconomic feedback effects. Despite initial claims that the tax cuts would pay for themselves through increased growth, federal deficits continued to rise in the subsequent years. Effects on income. Inequality. Critics argue that the TCJA disproportionately benefited corporations and high-income individuals. The top 1% of earners received a significant share of the tax benefits, exacerbating existing income and wealth inequalities. While the act aimed to simplify the tax code, some middle and lower-income taxpayers saw minimal changes or even increases in their tax liabilities over time. Long-term economic implications. The anticipated boost in economic growth from the tax cuts was short-lived, with GDP growth rates stabilizing in the years following the TCJA's implementation. The increase in federal debt raised concerns about the government's ability to fund essential programs in the future, potentially leading to cuts in social services. Debates continue over the efficacy of supply-side economics, with the TCJA serving as a case study for the impact of such policies. In conclusion, the Tax Cuts and Jobs Act of 2017 brought significant changes to the U.S. tax system, with the goal of stimulating economic growth and simplifying taxation. While there were immediate effects, such as stock buybacks and initial boosts in certain economic indicators, the long-term impacts include increased federal deficits and heightened income inequality. As we reflect on these changes, it's essential to consider the lessons learned and how they can inform future fiscal policies. Thank you for watching my comprehensive analysis of Donald Trump's tax cuts. If you found this video informative, please like, share, and subscribe to my channel for more in-depth discussions on economic policies and their impacts. I welcome your thoughts and questions in the comments section below.